Good afternoon. Welcome to today's Wednesday market review. My name is Stock Darts, and it's Wednesday, so we're going to do what we always do, which is review the markets. We're going to go ahead and take a look at the four major market indices. We're going to look at the S&P 500, the NASDAQ Composite, the Dow Jones, and the Russell 2000. Once we finish looking at the four major market indices, we'll also take a quick look at the U.S. dollar. We'll look at oil, gold, silver, Bitcoin, and see how different currencies and different stores of value are behaving with respect to each other. And then once we finish with that, we'll move on to sort of the more open area of the stream, which is where we look at either chart requests or I highlight some different types of trades that I've been looking at over the last week or two. If anyone in here has a stock they want me to look at or a chart, feel free to type it into the chat tab. I'll be more than happy to help out. If you're watching a recording of this, you can always find me on Twitter at StockDarts and ask me on there. You can find the recordings of this, for those of you that are live, at YouTube StockDarts, or if you visit me at patreon.com/StockDarts, you can find my weekly blog content, which includes trade ideas, as well as just generally expanding on any of the information we have during these, we come across during these Wednesday market reviews. What I like to do on Wednesdays is analyze what kind of market environment we're in, and then basically I try to tailor my trades to do that. And if you go visit me at patreon.com/StockDarts, typically at the start of the week I'll post what my thought process is as far as what I'm anticipating for the week and how I want to go ahead and approach and trade it. And then every now and then I'll also have posts maybe on Tuesdays or Thursdays, as well as obviously reposting these Wednesday market reviews on Wednesdays. But more than anything, I think that the real value there is making sure you visit on Mondays and try to see what my approach is and how I'm going to go ahead and try to trade each of the given weeks. All right, so let's go ahead and get started. First thing I'm going to do is look at the S&P 500 through the ETF SPY, and as you can see, we're still pretty much within this nice uptrending channel. The market has been in an interesting spot over the last couple of weeks. Actually, really the last month and a half now. As you can see, we were watching volatility increase as we were going from the top of the channel down to the bottom. It looked like there was a good chance that the trend was going to sort of fade to the point where we couldn't really rely on this channel anymore. For the moment, that hasn't played out. The Dow Jones and IWM, which we'll get to in a little while, have actually been able to kind of propel the market upwards as we continue to see this rotation from the names that have done well, the COVID names from 2020, a lot of big tech names, into names that were kind of hurt but are now starting to do better with the anticipation of a full recovery. And a lot of those components are in the Dow and IWM. And when we get to those, we'll take a closer look and see what's going on. But the key here is the S&P 500 was struggling a bit as it was contending with all-time highs. And the idea was, or the question really was it going to stop the Dow from moving higher, or was the Dow going to pull IWM, or the NASDAQ and the S&P 500 upwards with it? And in the case of the S&P 500, it was able to pull us up to new all-time highs, which we printed Monday and Tuesday. And you can see today we've sort of faded back a bit. We again found a lot of sellers up here. I don't anticipate a strong rally on the S&P 500 from where we are right now. We've already had one, and I think at this point it's more a matter of consolidation and pulling back and retesting support now. One of the good things that we've seen here as far as the price action is concerned is volatility has started to die down. And that's actually good because it's showing that buyers and sellers are starting to come towards a more of an agreement as to where value lies, and it was a positive agreement. If as long as you're a bull, you're happy with the agreement because it pushed price back up above the 50-day, above the 20-day moving average, and back within the upper edges of this channel, that we could start to extend a little bit further and see just how long this is going to persist before we eventually break and start trading sideways. Now, that's something that will happen eventually. You can still see the moving averages are starting to taper down a bit. They're starting to slow down. You can see that the 20 is actually moving sideways already, while the 50 is still kind of supporting price and moving upwards. I think price action has done enough to kind of salvage the situation right now and to get this 20-day moving average to start turning right back up and start trying to catch up to price again. And that could lead to this trend persisting a bit longer. But we'll see just how that reacts or how that behaves from here to next week. And what happens beyond that. But overall, it's pretty bullish at the moment. I think the big key for me this week was the fact that I didn't really like the risk reward. We had a pretty big move off of the lows. I've been trading pretty cautiously since the end of February, because the market was starting to get kind of choppy, and there was a lot of discord between the different indices, and getting a lot of false moves where you have 2 strong days up followed by 2 strong days down, followed again by 2 strong days up, and then by 3 days down or 2 days down, and back and forth. And even to a certain extent, we're still getting that this week with a strong open, and then the last 2 days have kind of been met with sellers. Yesterday we sold a little bit into the close, and then today we opened down. So there's still a little bit of back and forth going on here, with the markets not really sure what they want to do next. I think that this is going to continue as we keep trying to push the envelope and keep trying to push higher, because we're just reaching a point where the market's starting to get a bit tired. And I still anticipate a further correction at some point in the next month or so, or even next couple of months. Not necessarily a strong correction, but I expect that this uptrend is going to slowly kind of fade out, and we're going to start trading sideways, like we're going to see a little bit in the NASDAQ. It's already doing that. And the question will become, as we start to transition sideways, is money going to rotate back into the S&P 500 and the NASDAQ and away from the Dow and IWM, or are we going to continue to see the Dow and IWM outperform as we kind of shift back to the more of a sideways market? Now, these uptrends can persist a lot longer than we expect, so I'm not necessarily saying or advocating to try to short the market or to try to give up on long plays until we see that, because the truth is that I'm just speculating, and what my thoughts are on the market don't really affect the way I trade that much. I still want to respect the price action and follow the price action. So despite the fact that I wasn't that bullish in what I'm seeing out of the price market, or out of the market and out of the price action, I'm still recommending and taking bullish trades, because that's still the direction of the market, and that's still the most beneficial way to kind of follow along. Now, the big key is, of course, is that I'm being very picky about which stocks I like, and making sure that I really like the risk reward that I'm seeing on the individual names that I'm focusing on as we kind of wait out until we get a better opportunity. And so what we're really waiting for here is for us to kind of come back down and test these moving averages and see if the buyers are willing to support again, and try to buy support rather than breakouts while the market continues to kind of shift towards more of a sideways environment. Now again, it can continue upwards as it's done so, and if that's the case, we want to continue to buy dips. What we don't want to do right now, and I think this is the big key and the big takeaway from, if you're going to take away anything from what I say today, it's don't chase price action. There are times where chasing price action, while it's never really something that I'll advocate or recommend, there are times where you don't get that punished for it. When a market is trending steadily, it's usually okay. It's not okay to do it, but if it happens, people don't get that punished. But the way things have been working recently, even though we're still in a pretty good uptrend, with the volatility that's been increasing, with the back and forth, the market has been punishing traders that try to chase price action and traders that try to buy at highs or sell at lows. And so what you want to do right now is make sure that you're patient and understand that the market is always here, and it would always give us opportunities, and you don't need to be you don't need to succumb to the fear of missing out. That is often what puts us on a wrong foot forward when we go ahead and try to take our trades. Now, if we're looking at key levels in the S&P 500, I think that we've kind of moved forward enough that we can identify a pretty good spot here if we do start to falter a bit and kind of correct more. We can see this line here. I'm going to turn it into a dotted line, as I like to do with some of these support levels. With the pullback that we had into our channel, once we were able to get back above 384 or so, and then back above the 20-day moving average, I think that this established the previous highs that we printed back in January as a key support level, and I think this is going to be a good support level to watch as we kind of come back and retest. And if we start to transition towards a sideways market, I think we can expect support to initially start here at 385, and then possibly have to come back down to about 375, 376. So this is a good zone to pay attention to if price action continues to erode and we start to lose this channel. Obviously, if we don't lose this channel, rather than this trend line that I'm kind of projecting forward, I think the more important thing is to keep an eye on the 50-day moving average and the 20-day moving average, as they tend to be a little bit more important when you have a market that's trending upwards and kind of climbing as it is at the moment. So Those are the intermediate and shorter term levels we want to watch, is the 20 and the 50, as well as this level here around 385, and then possibly 377. I don't think we need to focus on anything below that until we see a lot more selling pressure in the market, which doesn't really seem to be the case at the moment. There aren't really any catalysts coming up that could affect it. So what we want to do is just kind of watch and trade the price action. If it does kind of ramp up from here and start climbing higher, the issue we have is the risk reward just gets worse and worse and worse the higher this goes. So what we want to see is we want to see a consolidation range here where the volatility continues to tighten up a bit and we get a decent entry as we start to come back and test either the 20 or the 50. Now, does that mean that we shouldn't trade at all right now? No, because when the market is behaving the way it is right now, there are a lot of stocks that are not trading quite as correlated to the market as they normally do. When a market is kind of going back and forth and chopping back, and when you see, when we get to the Dow and IW and the NASDAQ, you'll see that we have sort of different charts across the four major indices. When you have a situation like that, it becomes a little bit more of a stock picker's market where not every stock moves up and down to the strong current of the market. When the market starts to get more of a choppy current, you get stocks that kind of do their own thing, whether they're a week ahead of the market or a week behind the market. So we can still find stocks that are pulling back into support and give us better risk reward than maybe what the overall markets are doing. And that's what we want to kind of focus on as we look for trades over the next week or two, and as we've done already for the last month or so. Now, if we move on to the NASDAQ, you'll see again a very different picture compared to the S&P 500. One in which we've already lost our steady uptrend and have already switched to a sideways market. Now again, I think more than anything, this highlights the rotation that has really taken place over the last couple of months from the tech names that really outperformed throughout 2020 into the Dow components and the retail names and the energy names that were really slammed in 2020. And even as they started to recover, they didn't really have full recoveries, and they're only now starting to recover more strongly. You know, things like airlines, gas stations, casinos, hotels, restaurants, a lot of those areas struggled, and only now are starting to make their way back up. And so, as is often the case, money has to rotate and come from somewhere. And if new money's not coming into the market, then what's going to happen is profits will be taken on a lot of the leaders as they take a breather and put into some of the other names that are starting to emerge with more strength and starting to become the new leaders. And so that's what's been happening. I've mentioned this for a few weeks now, and I will continue to mention this. I don't think that we should ignore these tech names. I think that they are getting ready for a bounce. A lot of the big tech names, a lot of the FANG stocks, a lot of the names that did well in 2020, I think are still going to be leaders moving forward in our economy. And I think that these pullbacks can be seen as pretty good buying opportunities as long as you're disciplined and understand what you're getting into, particularly in the long term, more than swing trades. I'm looking at, you know, the normal names that you would look at on big market pullbacks, stuff like Amazon, Apple, Tesla, and I'm watching them as long-term entries, not necessarily just as swing trades, because I always like to add whenever I can to something like Amazon when it gives me good value. And there is potential for a further drop, but there's also potential that they're finally starting to kind of gain some strength and move upwards. So this is a point where you want to start watching them and you want to identify what you consider to be a good buy in them and keep an eye on those levels. And then once or if they get to those levels, watch the price action to see that buyers are stepping in and defending what you consider to be good value, and go ahead and enter. Now, as you can see with the NASDAQ, we're still kind of stuck in a pretty interesting spot here because we broke the short-term downtrend, but we're still kind of stuck below this channel. You can see the 20-day moving average has already crossed back below the 50, not necessarily indicating the top, but more than anything indicating the end of the rally that we saw, and the beginning and the transition towards a sideways market. And so while we are not seeing this transition to a sideways market yet on the S&P 500 and the Dow, I think the fact that we're seeing this on the NASDAQ is a good indicator that we're likely going to see it in the others. While the Dow and IWM are leading in the short term, the NASDAQ is the leader in the long term. And so I think that the fact that the NASDAQ has already transitioned towards sideways is going to more likely than not influence the other indices to eventually start trading sideways as well. Now that could be something that takes place throughout the month of March, or it could be something that is delayed and doesn't really take place until April or May, or maybe even into the summer, depending on how strongly these recovery names continue to bounce. But I think the fact that we're already seeing this happen with the NASDAQ is a sign that we're likely going to see it soon on the S&P 500 and then eventually with the Dow and IWM as well. Now, there is of course another scenario where the Dow and IWM begin to pause and take a breather and money rotates back into the tech names, and then the NASDAQ is the one that leads the next leg up in our rally. And that could be a possibility. So as traders, what we always want to do again is you don't want to get married to whatever thought you have. You want to make sure you respond to the price action, and you go ahead and you know, outline 2 or 3 different possible scenarios that you think could take place and how you would go ahead and trade them if they do take place. And so that's the way that I approach it, and that's the way I will continue to approach it. And so I'm looking at NASDAQ names as nice value support plays, and if we start to break out and money rotates back into them, then they should perform well for me. And if we start to transition to more of a sideways market, well, then there's still going to be good value plays as they start to hammer out a range, and you'll just figure out what the floor is and buy at the floor, and then try to figure out what the ceiling is and take profits or sell calls at the ceiling to go ahead and try to take advantage of a more neutral environment. So that's kind of my thought process as far as how I want to look forward into this. Let's quickly delve into the FANG stocks so you get an idea of what's going on underneath the surface with the NASDAQ and with the Qs. As you can see, Facebook has bounced and given us good entries for those that were willing to go ahead and enter. I wasn't really looking at it as much as Amazon or Apple, but you can see Facebook did a good job of finding support at the 200-day moving average and is starting to make its way back up. And as you can see, it has already been range bound for much longer than the NASDAQ and the Qs in general have. So this again is showing what the market has been doing, slowly transitioning towards a sideways stance. If we look at the next one up, which is Amazon, again, you can see a stock that has been range bound for 6 months already at least. And again, we had a move below the 200-day moving average. It is currently bounced back above it, but as you can see, it's still struggling to get back above the 200. The 20-day is actually still pushing price action down, and there's a decent chance that Amazon's going to come right back down and test the 2900, maybe 3,000 level. I still consider that to be good value. When you have a stock trading in a steady range like this, particularly one that you are fine with the fundamentals, it makes good sense to try to buy the bottom and then take profits as it comes back up and test the top of the range. And like I said, sooner or later this will eventually start to kind of recover and make its way back up. Now there's of course the chance that it drops further down, but that's really only going to happen if we see a further correction across the board with the entire market, or if some news comes out that really slams Amazon for some reason. But I don't like it maybe as a buy at the moment because it's already kind of bounced and is having some trouble with some of these resistance levels. But if it gets back above the 20 and the 200, there's a decent chance that it makes a run back up for another 200 or 300 points. So keep an eye on it here, or keep an eye if it goes down a little bit further. Apple, another one doing very similar things to Amazon. It's been kind of pulling back. It recently started to break above this trend. Those of you that are regulars or visit me on Patreon, you'll know this was one of the trade ideas we were looking at, and it actually had a very nice move for us yesterday, but it kind of gave back a good portion of that today, and it's flirting with stopping out territory. It's not quite there yet, but it's getting pretty close, and a lot's going to depend on how it goes ahead and tries to behave here. So it might not have been ready to make its way back up towards its recent highs, but it is starting to bottom out, and it is giving traders a decent opportunity here as it continues to stabilize and try to figure out exactly where the floor is for its sideways move. And again, just like the Facebook and Amazon charts, Apple is also one you can see is already trading sideways, just like the Qs are starting to do. Netflix, same thing. Found support at the 200, tried to bounce, is struggling as it comes back up into the 20. Almost the same exact picture as the other ones. And then the only one that's really different right now is Google, which has been holding steady and is actually still trading pretty close to highs. But as you can see, it also is starting to kind of get a little bit stuck in neutral here. So, and then the last one, again, it's not a FANG stock, but I like Tesla at this point to be considered similar to them. And you can see it's doing something just like Apple, where it has this decent short-term trend that it's trying to break, and it was able to do so, but it hasn't really been able to constructively follow through on that, which again I think is also an aspect that we're seeing in the market in general, where we're not really seeing strong follow-throughs unless they're very, very limited areas of the market. And so we got to pay attention to that and understand that if a market is going to behave like this, it's probably indicative of an overall neutral environment that maybe we're not seeing yet on the charts, but it might be coming into play. All right, so I think if you look at these 5 charts or 6 charts, I think that gives you a good idea of what we're seeing on the Qs and why the Qs are doing what they're doing. And what we can expect in the future. We need to see some of those other names show some more recovery in order to get back above the 20 and the 50 and start to make our way back up towards recent highs. But like I said, it looks like we're really establishing a sideways range, and at the moment we're trying to really establish a floor, which is currently established at 300, which I think can be seen as a pretty good floor. That was also where we kind of topped out in the summer of last year before we were eventually able to start running through that as we headed into the holidays. And so a retest of that area, which has already occurred once, could happen again. And the key here is, as long as that's a support level, we can assume that's the floor for whatever major base we start to form if we end up doing that throughout the summer months or so. All right. So that's the major key level is 300. We have a shorter term level around 310. We are kind of at resistance around 325, and then the next key level is 330. And I think that the NASDAQ should be contained probably between about 330 and about 300 from here to next week or the week after that. I don't think we're ready to really push to all-time highs, but I also don't think we're ready to really come down and test these lower levels. And we probably don't even have to test 300 yet. We're probably still somewhere around here, this 310 to 325 area that I have outlined with this rectangle. Now, if we look at the Dow, completely different picture. Exact opposite of the NASDAQ. Instead of breaking down below the bottom of this channel and starting to trade sideways, we've accelerated through the top of the channel. Now, typically, an acceleration through the top of the channel, a big volume spike at the end of a rally, that's usually not really a sign of a trend that's going to continue persisting upwards, but it could be, right? So as long as we see buyers stepping in, we have no choice but to kind of follow suit and try to play the long names in the Dow. Now, the problem, of course, is the risk reward here is not good. As you can see, we've got 1, 2, 3, 4, 5, 6, 7, 9 candles and only one red one in the last week and a half, almost 2 weeks now. And if you want to go long here, you're trying to play momentum, but like I said, the overall markets aren't really conducive to momentum trading right now, and so I'm not really a fan of going long on the Dow right now. Now, like I said, there are Dow components that could do well. That was part of the Apple idea that I had, was it was a Dow component that was kind of struggling and bottoming out, and I was hoping it would kind of follow suit with the Dow, and it did so initially, but like I said, today it's not really seen any follow-through. We did this last week. We're going to do it again today. We go to FinViz, which is another free service that you could find on the internet here, and we're going to go to Screener. We're just going to look at the Dow components. We're going to look at their charts. And we'll see there are Dow components that aren't necessarily rallying strongly yet, right? You can see Apple is still kind of bottoming. AMZN has had a big bounce, so even though overall in the chart it doesn't look like it's doing well, the risk reward's not great here. But you can see American Express has actually pulled back despite the fact that the Dow has broken out. So there are areas. You can see Salesforce also trying to stabilize, although I don't like this chart at the moment because it's underneath support at 220. But you can see there are parts of the Dow that are actually still maybe offering decent buying opportunities despite the fact that the Dow is going up. And this is part of what we were discussing when we were looking at, when we were still with the S&P 500, is even though the index is offering poor risk reward, there can be components of it that are offering us better risk reward. And when a market starts to transition towards a more neutral environment, which that might not be the case with the Dow. The Dow might continue to run up. But what ends up happening, like I said, is sometimes you get money rotating back and forth into different areas. And so it could be that some of these areas of the Dow that are still not at highs and haven't run up over the last 9 days, they could be giving us opportunities here. If the market wants to keep climbing, it could be that the names that have already climbed take a breather and some of these other names kind of come up a little bit. So, another area for you to look. And I like to give you guys ideas here. I know sometimes people try to figure out, or they ask me and they reach out to me and they're like, how do you find your trades, or where do you look for trades? And so trying to elaborate a little bit as to how I go ahead and do things. And so one of the things you want to look at, like I said before, is I like to look at the NASDAQ, and in this particular environment, I wanted to see if there's any good values. But also, when you look at the leader like the Dow, you can go ahead and dig in a little bit more deeply and see what the components are and see if any of them offer good opportunities. And then you can also see some of them, as strong as they've been, you don't want to get caught up in something like this. And this is what I mean about not chasing price action. You see something like Home Depot, and yeah, sure, Home Depot can continue running from here. It can go from 285 to 290 in the next 3 days, but that wouldn't make it a good trade. You've got something that bottomed out in the 250s and has run up 30 points in a matter of a week and a half, 2 weeks. So despite this strength, it's not a good trade for you at the moment because the risk and the reward is poor. So you want to go ahead and look at other. Now, you don't want to look at necessarily the bottom of the barrel, but you want to find strong names that maybe have already moved up and they're consolidating and are going to offer better opportunities. And so one of the things we want to do, like I said, is if the Dow is leading, take a look at these Dow names and try to look at names that have pulled back and maybe are going to offer us better opportunities in the near future as they stabilize and maybe start to make a bounce, right? So you can see American Express now. Is it worth a trade at the moment? No, not yet. It's got 3 red candles and it hasn't really bottomed out yet. But this is one that maybe we could look at buying as it bounces off to 20, or if it needs to come back down to the 50. But we could put it on our watch list and wait to see a constructive candle pattern that gives us a good risk-reward opportunity for an easier trade, rather than trying to chase something that's gone up 8 or 9 days in a row, like the Amex did not that long ago, right? So you can see it had the big run up, and then now it's starting to consolidate off of that. So this is not necessarily a name that's weak. It's a name that maybe is a little bit ahead of the curve and already ran up prior to the Dow and is starting to pull back as the Dow starts to follow it, right? So this is another way for you to go ahead and try to find trades and use some of the information that we come across during these Wednesday market streams. So, the Dow in general, like I said, is leading the way upwards. I don't like where it's at as far as the index is concerned for buying because, again, the risk reward is poor. But that doesn't mean it can't continue to climb upwards or have a shallow pullback and come and test the bottom, or the top of this channel, which will now be the bottom, and find support here and try to make its way back up. Eventually, something will come to a head. Either the NASDAQ will resume upwards and start to catch up, or the NASDAQ will continue to trade sideways and the Dow will have to come back down and start to maybe play, start to come down and mimic the NASDAQ as it starts to erode towards a more sideways range. But at the moment, we don't know who's going to win out, so we just kind of have to watch the interplay between the two and see what ends up happening. Like I said, a lot of Dow components have only now started to recover. Stuff like Disney, people are finally starting to go back to the parks. Now, Disney did recover a little bit more quickly than expected, but you can see Disney has really run up. Chevron, a lot of gas stations really struggled in 2020. Oil has really started to ramp up, which we'll see later, and so you can see it's bouncing up. Stuff like Caterpillar, Boeing, they're only now finally starting to recover off of, Home Depot, off of some of the troubles that they had throughout 2020. So there is potential for this to continue a little bit further. All right, so last thing we want to look at is IWM. And again, very similar to the Dow Jones, you can see IWM at the moment is doing a good job of kind of holding up at highs. Now you can see again, we've sold off over the last couple of days. I think the Dow is taking the leadership mantle from the Russell 2000 in the short term. I still think the small caps are doing a good job of, again, illustrating this rotation into some of the areas that struggled throughout 2020. And I think that this is kind of where the strength lies at the moment, and still one of the areas we want to keep an eye on. Now, unfortunately with FinViz, we can't actually, we can only screen by S&P 500 and by the Dow. We can't look at the Russell 2000 through here. But we can always just go through sectors and look at some of the smaller cap areas and try to find it. Or we could do it by market cap. So we can go to small cap and, maybe go back to any. And then for market cap, we can just take a look at, instead of large, we could just look at small. And that gives us a better idea. Now, of course, 1,800 names here. The Russell 2000 is 2,000 names. So we would want to probably screen it through other factors in order to get a list that we can actually pay attention to. But that's one way if you wanted to go ahead and look at some Russell 2000 names or look at some smaller cap names that maybe are outperforming. But again, we don't want to dig too deep into that. But this is a tool that you guys should be comfortable or get comfortable with, because it's a good way to find trades, especially when stuff on your watch list isn't really working. One thing I've always tried to advocate here on these Wednesday market streams and in my Patreon pages, to diversify your trading approach and to make sure that you are examining all possible avenues for trading opportunities, and not just sticking to some of the big names that everybody follows, or even necessarily to stocks. But that we'll get into that later as well. All right, so IWM, as you can see, we had the broadening wedge. We were able to break above it, and we're starting to pull back, and we're holding at a pretty good spot here. Now, again, this channel is starting to get long in the tooth, and for the most part, I think I think we're transitioning towards a more sideways market. You can see we already broke it, even though we came back and started riding the top of the trend line or the bottom of the trend line again. You can see that it's starting to reach a point where this trend line will not really be valid for too much longer. You can see the 20-day moving average has already kind of turned sideways, indicating that momentum is starting to really die down. And this is not a bad thing. This doesn't necessarily mean that that we're going to top out and head back down lower. It just means we need to start stair-stepping a bit as more people take profits and as we wait for new buyers to step in at areas that they are confident in their value, right? You don't want to continue to chase action upwards, and you're not alone. There's a lot of traders like that, so they want to wait for better value spots. It could be the 20, it could be the 50, or it could be back down here on the 212, 213 areas. So the key here is to watch to see where the floor is going to be. There's the chance, as you can see, we're printing a little doji today. There's a chance we follow through upwards again to close out the week, which would be in contrast to what we've done over the last month, although we did close last week off very strongly. So there's a chance that that strength persists, and if it does, then the IWM is going to print a little bull flag here, at which we are probably at the bottom of that bull flag. So if we open up green tomorrow, or if we close green strongly today, there's a chance that we're just printing a bull flag, which could eventually lead to a breakout above 234 and an attempt to stay in this channel for a bit longer. If we fade into today's close or into tomorrow, we're probably going to have to come back and test the 20. And then I think the big key is, does the price action stay above this broadening wedge? And I think it probably does, at least in the short term. And that would be more of a kind of a more benign way to start shifting sideways without having more volatile selling come in and with a move back down below the 20 or below the 50 and back into this 213 area. So those are the spots we want to watch right now. We want to watch whether we hold right at today's price action around 228. If not, do we hold it to 20 around 224, 225? And if not, do we come back and test the 50 or even a little bit below that? And then as far as resistance is concerned, it's basically right up here, yesterday's highs or Monday's highs. And that's really as far as we can expect it to go at the moment. All right, so that's the four major markets. As you can see, or as you saw, there is a little bit of a disparity, particularly between the NASDAQ and the other three indices. The other three, the S&P 500, the Dow, and IWM, the Russell 2000 are all trading pretty close to all-time highs. And the market is still pretty strong. I think long-term, we're still in a very good uptrend. Intermediate term, we're actually still in a pretty good uptrend. And I think in the short term, we're starting to see some price erosion where we're going to need to kind of stabilize and trade sideways for a bit. And like I said, that's unfortunately, we don't really know exactly how long it takes for that to happen, for that transition to fully take place. But I think it's starting now, which is what's making it a little bit more difficult for our trades as we get these 1 or 2 day bounces that are followed with 1 or 2 days of selling, and I think that's again a larger function of what we're starting to see across the board. So still trade to the long side, still try to take advantage of the bullish momentum, but be a little bit more careful about it because be more disciplined as far as what risk reward you're looking for and what setups you want, and make sure that you're not trying to buy something that's up 5 or 6 days in a row. All right, we're going to run real quick through the U.S. dollar. As you can see, the U.S. dollar did have a strong run up over the last few weeks. We discussed that last week. As far as this week, from last Wednesday to this Wednesday, it's basically been neutral, slightly up, but basically just kind of exploring the top of what is probably going to be its range in the near future. I don't know that it's ready to move up. I know they're starting to talk about raising rates, which would likely propel the dollar to start climbing up a bit. But that's really not 100% confirmed yet. And I think until it is, or until we get more definitive news from FOMC or from the Fed, that the dollar will probably have some trouble coming back above this 24.90 to 25 area on the UUP index. If we look at the euro US dollar cross, it's going to be the opposite of that, of course. And as you can see, the euro really struggled to get back above 123 and finally gave the dollar a bit of a chance to kind of take control of the price action. And it's done so by pushing the euro back down. And we're starting to reach a point again, like I said, it's the opposite of the other chart, but it looks like this should be a floor for the euro as it comes back into the 200-day moving average, which means the dollar should probably lose a little bit of ground here as the euro tries to stabilize and bottom out. If we look at the US dollar Japanese yen cross, this is the one spot where we're really seeing a lot of strength in the US dollar, and I think a lot of that is a function of of Japanese yen's weakness. And this was kind of the spot to be in, and we discussed this last week and the week before that. This is really, if you wanted to be long on a US dollar trade, this is where you wanted to be. And it's done really well. I think, again, it's getting a little long in the tooth. We have to go a little bit longer term to see where the next level of resistance is. But as you can see, we're starting to reach a pretty decent spot where it's sold off in the past. So the yen might make a rebound against it soon. But overall, that's the one chart that really shows US dollar strength. And then the US Canadian would be the opposite. As you can see, the dollar actually has broken down again versus the Canadian. And I think, again, this is a function of oil, this is an easy transition into oil, in oil futures. Oil continues to behave very well. It has struggled over the last few days, but really it's just consolidating below all-time high, well, not all-time highs, but below recent highs, and is just kind of stabilizing as it waits for its 20-day to come up. More likely than not, it will bounce here and make another run at 66 to 67. If it does break the 20, then we're probably going to see a move back down to 60. I personally am rooting for a move back to 60. I don't really like to see oil prices get too strong too fast. I feel like that puts a lot of pressure on our economy. But I think also the fact that it has run up so much, I think that this again is one of the indicators that gives us a good clue as to what the market thinks about our economy recovering. And the fact that oil prices are going up shows that there's an increase in demand for oil and for energy. And at the moment, it's clear that our economy can sustain these prices. Now, again, oil could go much higher from here, and then we'll see what kind of pressure it puts on it. But at the moment, this is more than anything telling us that the market is anticipating more recovery or is already recovering more strongly. And so we'll see what happens here. It's either going to, like I said, find support here right at 64 and make its way back up, or if it falters here, then it's probably going to come down and test 60. And I don't expect us to really lose the 60 to 59 area from here to next Wednesday, and possibly not even throughout March. But that would be the next level of support. And like I said, I pointed this out weeks ago when the markets were starting to really run up. When you see the 20 and the 50 really start to spread out and start to trade like this, like train tracks, that's usually a good sign of a trend. And until we see the 20 really flatten out, we should expect this trend to persist. Now, the 20 is starting to slow down a little bit, but that could just be short-term fluctuation. All right. Now, in contrast to oil, gold and silver, as we can see with GLD and SLV, the two ETFs, it's not doing well. And this is something, as those of you that are regulars know, I have been completely off of this. I have not wanted to trade gold or silver at all for several months now. I still have no interest in trading them whatsoever. Typically, I look at them as potential inverse dollar plays. I look at them as stores of value. Now, of course, there's other ways to trade them, but the way I like to look at them, and the way that basically what I use them for, is to give me a good gauge of if money is trying to flow out of the U.S. dollar and into different stores of value, particularly with gold. However, I think Bitcoin has taken up a lot of that, and which is why we're starting to look at Bitcoin more regularly. And I think that the fact that money is more comfortable flowing into Bitcoin right now as a store of value compared to gold and silver is part of the reason why these two precious metals have struggled a bit. Now, SLV looks a little bit better. And, long term, if you are not a believer in Bitcoin, which is an argument for another day and one which I think you were wrong, but if you're not a believer in Bitcoin, then maybe you think that, gold is probably a good long-term value buy at these levels, and that's something maybe you want to scale into. As you can look at on the weekly chart and see where it's trying to stabilize. And so if this is something that you believe in and you want to hold long term, then maybe you want to look at it from that perspective. But as far as I'm concerned, swing trading or even long-term trading, I don't have any interest in it. Like I said, I prefer Bitcoin, and that's the next chart we're going to look at. And as you can see, Bitcoin, it had a nice run up into the 60s, into almost 62,000. It has pulled back. It's back towards the 20 now. It's in a tough spot here. This is not I don't recommend this as a good buying opportunity for long-term trading. I think for swing trading, it's not that great either. I think that there's still potential for a further drop into the mid 40s, and I think overhead. I don't think we have a lot of upside overhead in order for it to be a worthwhile trade here. So I think this is one that I'm kind of just, I'm already in, obviously, in a lot of cryptocurrencies, but as far as looking at it for different trades, I don't know that I'm that interested in right now. Hey Ray, good to see you. You tried to join Gemini and Coinbase, but they both won't let you deposit funds because you're Canadian. Well, that's unfortunate. I'm sorry. I don't know. I didn't know that Coinbase didn't let Canadians enter it. That's kind of tough. I know Canada has had some interesting policy decisions towards cryptocurrencies. So I don't even, I wish I knew. I think that's something that you're going to need to Google. Matter of fact, let's see real quick. Let's just Google real quick. Digital currencies are not a legal tender. Digital currencies such as are not legal tender in Canada. Coinbase. I mean, it says now available in Canada, so you might there. There has to be. If you go to Coinbase.com places Canada, maybe search here. And maybe contact them here. It might be that you have to go to an actual, I know Binance does this, where Binance has they have like a U.S. version of their platform because we're not allowed to use the Chinese version, and it might be that Coinbase has something like that. I don't know, but you should probably check here and see what they do and ask you. You can see it says available here. I don't know. Do a little more research, but it seems kind of strange that you wouldn't be able to. You said but it won't accept your debit card. It could be that your bank doesn't allow it. I don't honestly. I haven't done any research because I'm not Canadian, so I haven't looked into it. But it's something you just kind of look into it a little bit and see if you could find a way in. But I imagine. I mean, it says they support it, so I imagine they can. If not, then it becomes a lot trickier. Where you have to use like VPNs or something, or find other ways, But that's not something I'd recommend you doing right now. All right, so to go back to Bitcoin right now, so I think Bitcoin is still strong, but I don't know that I like it as a trading opportunity right now. Same thing with Ethereum. I think Ethereum is doing okay here, and I like what it's doing, consolidating, but it also seems to be kind of stuck here where it's really struggling to break above 2,000. It actually fell a little bit short of highs on its last push-up, so there is a chance that it needs to come back down a little bit more. I liked it a lot as a buy. As you guys remember, I recommended it back here at the end of February, and it's done really well for me. And this is a spot where I'm being a little bit careful about it, because if it starts to lose this 1720 area, it will likely come all the way back down to the 1500s. So I'm kind of being careful with it here. As far as swing trading is concerned, long term, I don't have any concerns with it whatsoever. Now, those are kind of the ones I want to cover. I don't know that I want to get into some of the smaller cap altcoins, but there are some. If anyone in here wants to know some of the other ones that I'm looking at, type it in, ask me, and I'll spend more time on some other cryptocurrencies. It's an area that I look at pretty regularly, but I don't want to bore you guys if it's not something that you guys in here are interested in. Ray, you want me to look at a few charts, so we'll take a look at those. And like I said, if anyone in here is interested in what I'm looking at, let me know. All right, Ray, you say you want to buy ANT. I don't know which ANT you're talking about here. All right, are you talking about the crypto Tethers, or are you looking at some other stock that I can't see for some reason? Oh, those are all cryptos. Okay. All right, so you're looking at all right, crypto. I'm going to look at it on Binance. All right. I don't know. I haven't looked at Tethers in a while. I'm not that keen on this one, to tell you the truth. I know, so it's very well. This is the Bitcoin chart. Let's go to the dollar chart. All right. Let's look at the weekly chart. All right. Actually, no, this isn't that bad. The Bitcoin chart looked a lot worse, but versus the U.S. dollar, it looks okay. Yeah, I mean, it looks okay here. It looks like it wants to get back above 7. A lot of times with these, I like to see what they're doing, and make sure that it's doing something I like. Now, one thing to keep in mind, Ray, with some of these cryptos you're looking at, is if you were going to, and again, I don't know, it depends on what platform you end up getting. But one thing with ANT, with Tethers, is if you look at it right now, you can only buy it if you have a Binance account, or if you have like Bittrex or Kraken. You can't buy this on Coinbase, and so that might be something you need to pay attention to, assuming you get into Coinbase. So what you have to do with these is, it's just like a currency cross. When you're looking at a cryptocurrency, you want to type in the name of the token, but then you want to price it versus something. So typically what I'll do is I'll do ANT, and then we'll do USD, which is US dollar. And so what this is going to do is it's going to show us ANT priced in US dollars. And as you can see, with cryptos, there are different exchanges. This is unlike a stock. Yeah, ANT USD is what I would do. And then what I would do is I would look at on Binance, because that's the area. That's one of the exchanges that I use. Like I said, I use Coinbase and I use Binance. And so I would look at it, since I have Binance, I'll look at it on Binance. And again, we're looking at it priced in US dollars. You can also look at it priced in Bitcoin if that's what you were doing, but I think that's a more sophisticated thing. So we would look at it in this respect. And like I said, so the one thing with this is you actually can't buy this on Coinbase. You can only buy this on Binance or one of those other exchanges. So you would have to see, and again, I don't know if they offer Binance in Canada. Like I said, I have the Binance US one. Okay. So let's take a look at the other one you want to look at. You want to look at CND. So again, we would look at CND, and then we would do US dollar. And again, this is a Binance. This is a Binance one. You can Bitfinex. By the way, these are other exchanges: Binance, Bitfinex, Bittrex. I would recommend sticking to Binance or Coinbase for now, rather than try some of these others. But these are the other currencies, or the other exchanges. So here is this one, Syndicator. I haven't heard of this one either. This is a good looking chart. Let's see on the weekly chart. one thing I like to look at with these is um, I'm trying to stay away from the ones that topped out in 2017 and 2018 and have kind of come down. Not necessarily saying I'll stay away from all of them, but what I do is I like to research and make sure that I understand and like whatever the project is. So something like this, I would just go syndicator coin, right? And I would come in and look and try to figure out what it is that they do. And by the way, a good place to look at, you've got this one, CoinMarketCap is a good website that gives you a good idea of what these coins are. So this is a good spot for you to always, if you want to go in and do more research into what the coin does, you can come over here. And as you scroll down, it'll give you news and what they do. And you can actually, you can do some research and go into like the white paper and stuff, right? If you really wanted to see what they do. Another good one is CoinGecko.com. And these guys also do a good job of giving you an idea of what the coin is. You come down here, it says about syndicator coin. It creates social and technological infrastructure needed to make effect. That's kind of like neutral. That's kind of like, business speak. But anyway, you do more research that way. I like to do that with a lot of these cryptocurrencies. To me, it's not just a matter of the chart. I want a good chart on a project that I think is good, right? And so the last one you want to look at is Dragon. This is another one. This one I think has been around for a while, Dragon Chain. Again, Bittrex and so neither one of these, this is going to be something that you can't trade anyway, unless you're going to, these are the kind that you're going to really, there's a lot of different ways, but you would either, you'd have to see if it's an ERC token, whether you could do it on a swap exchange or something, but that's way beyond the scope of what I think you're ready to do. So, Ray, I would say those three, at the moment, I don't know that they're ones that you can really look at because I don't think that you have access to trade them. Doesn't mean you can't watch them, but I don't know that you have access to trade them on their platforms. And actually, this is a good-looking chart. I like what I'm seeing here. This is nice. It broke above 12 cents. It had a nice big run-up, and is really, yeah, I actually like this chart. It's just a matter of, can you get access to trade it somewhere, and I think that's one of the problems with these, is that you got to find, you actually have to find like access to be able to trade them, So to give you a heads up, these are some of the Coinbase coins that I like or hold at the moment. Okay, so I like this one, Graph Token. I like the NU coin, Loopring. I like Algo and Maker. I think those are all good Coinbase coins. Sushi was recently added to it, and this one is a decent one as well. SKL was just added to it, and I think that's a decent one as well. There's others. Most of the Coinbase coins are actually pretty decent because they do a good job of filtering out which ones they like, and also, once a altcoin gets listed on Coinbase, it tends to do well because there's a lot more money that can go into it. So I'd pay attention to that. I would look at the ones that are actually listed on Coinbase and go from there. And then another area, but again, this is, I think, beyond the scope of what we want to discuss with you. But for those of you that are for anyone else in here that is into crypto, the hottest area right now in cryptocurrencies is NFTs, non-fungible tokens. And so, if anyone that's in here, I don't know how savvy you are with this, but if you just Google NBA Top Shot, you'll know that that's been one of the most explosive areas as far as non-fungible tokens go. And basically, a non-fungible token is sort of the opposite. So, like if you buy a Bitcoin, that's a fungible token. One Bitcoin is the same as another. But a non-fungible token is kind of a unique asset, and so a lot of people are using them as collectibles, whether it's art, whether it's trading cards, or stuff of that nature. And one of the things you could do is you could look at the underlying cryptocurrencies or the tokens that run these, and so some of them are Flow, which again, as you can see, went from basically $10 all the way to 31. Engine is one that's used with video games and has done incredibly well, going from 60 cents to 250, 270. Rarible, which is one of the exchanges where people sell art. Wax, again, an exchange. TVK, another one. Mana. These are good areas for you to also watch if you look. Now, the one problem with these, a lot of these have run significantly in the last couple of months as NFTs have really taken over, and they're like one of the biggest areas of one of the biggest areas of growth, and they're really hot right now. They're kind of in a bubble, so this is one of the things where you have to be careful. You don't want to get too caught up in chasing the price action. But this is the area that right now is the hottest as far as investing is concerned, as far as trading is concerned, and it's kind of the place you want to be. If you're someone that is into cryptos or into alternative types of trades. Do I have the name of a non-fungible buy? Honestly, Ray, I think that if you're looking at trading the currencies, the ones I just listed are the ones, but the tricky part is most of these aren't listed on easy-to-use exchanges. Flow, I have not been able to really get access to it anywhere. I like ENG, but it's not worth a buy right now. It's run up too much. And the same thing with Rarible, but Rarible is another one. It's a difficult one to get to actually get unless you use a service like Uniswap, which is, again, I think beyond where you are right now. But this is for others that maybe are going to watch this video later. I think the easiest one to get into is probably Mana, because it's I believe that it might even be on Coinbase. I'm not sure if it's on Coinbase or not. I haven't looked for it on Coinbase because, again, I have access to it on Binance. But that might be one. I'm pretty sure Theta is one that is on Coinbase. Although, actually, I don't see it here. So a lot of these, maybe you might not have access to these at the moment, right? So, but for those that are in here, this is an area that you want to pay attention to. Matic, by the way, Ray, I know if you're looking at my watch list, Matic is not. I don't know. You put MATI, but Matic is not actually a NFT. This is more of level 2 stuff. But this is one. Actually, this is one of my best holdings that I've had this year. But this is not NFT, but this is actually a great one also. But this is also Binance. It's not Coinbase. So, welcome, I guess, Riot. I'm not sure what your name is, C19 Riot. Welcome, thank you for joining. I do trade NFTs also. I do, I'm into NBA Top Shot. C19, okay. I do have an NBA Top Shot account. And so I actually do trade on that as well. So this is obviously one of the biggest areas right now as far as cryptocurrencies are concerned. Well, as far as NFTs are concerned, this is this is a place where people can collect. Basically trading cards of players, right? And so I'm on here, and I have a decent collection of players. So this is one area that I like. Also, I'm in the process of trying to put stuff up like on Rarible or like on Nifty, which are other, that's where you would buy art, like something like from Beeple. But I would say right now the NFTs that I actively trade is NBA Top Shot and then the currencies. And I think the currencies are the easiest way of doing it because you're not taking shots at artists or something. So for instance, Nifty Gateway, right? So this is an area where you would go and buy art from artists, right? But this is a very expensive. A lot of these guys, when they do their drops, they're expensive drops. Or you could go to Rarible, and then the problem with this is you have to sift through a lot of garbage. A lot of people that put the stuff on here. Does anybody could put their stuff on here? Some of it is good, some of it is bad, some of it is And so you could go through here, but the problem with this is if you're not sophisticated as far as judging art or the what people want, you might not end up with a good purchase, right? So if you're not comfortable with actually collecting art, then you probably just want to stick to the coins and just try to buy the coins. Something like Wax was a pretty easy one. It was trading at 8 or 9 cents, and it shot all the way up into the 20s recently. And these guys, if you go, you know, have to do a little bit of research, but a lot of these ones like Wax and TVK, they do stuff like these guys did stuff with like with tops like the Garbage Pail Kids, or like some Street Fighter collectibles and some other stuff. It's not with the explosive growth of NBA Top Shots, but you know, it's on there. So yeah, so I do trade I trade the currencies. Typically, these Wednesday streams that I do is about charts, so I don't really delve too deep into what I do with like Top Shots or anything of that nature, because that's really outside of the scope of technical analysis and chart reading. But since you asked, I do actually try to dig into actual NFTs, not just the coins. But I think the coins are an easy way for someone if you're not really good at you know, at art, or if you're not into maybe you feel like Top Shot is kind of like overblown or a bubble, and you're not into that. Well, you could just look at the underlying tokens and use those instead. Glad to have you in here, by the way. I think you're usually I only get a few of the regulars. I don't really get too many new people, so it's good to see someone new in here. All right, so no, unfortunately, I don't think that any of these. I don't think any of the NFT ones are on Coinbase, which again makes it tricky, and that's why. So unfortunately, there's a few of these that I only trade them on Binance, or something like Rarible is even harder, because I would have to do it like on something like Uniswap, which is, you know, you end up having to pay the Ethereum gas fees, which is what kind of threw me off of this. I didn't want to, you know, I didn't want to spend $80 or $100 to start a position on something when gas is as expensive as it is right now. Now again, that's probably outside the scope of what we want to do here. So I just wanted to point out, for those of you that are into it, you can find, you know, it's an area to research and to look at different spots of how you can gain access to them. I'm okay with missing out on something like Flow. As much as I would love to have bought this, you know, it was basically available in Kraken, and I couldn't get an account in Kraken because they don't allow U.S. customers to buy this, sort of like what he's having trouble with. So, you know, I'm okay with missing out on Flow because I've done well with NBA Top Shot, right? So I'm okay with that. But I do want to get into some of these others as I get more opportunities. So you used to watch my stream back with Stock Guy 22. Did he retire? No. Unfortunately, he actually ended up getting, he ended up defrauding some people that he was trading for. And so he was in the wind, and he ended up getting arrested. I haven't heard what's happened to him in a while, but he's out of the loop. It's taken me a while to kind of distance myself from him, but yeah, Stock Guy 22, I'm no longer associated with him and have not heard anything about him in a couple years. Yeah. So I just do my own thing now. Yes, Ray, he got caught. It's, you know, it's not something I really like to get into too much, because I know a lot of the people he took money from, and it was a lot of money, and they weren't really able to ever recover it. So yeah. But anyway, C19, welcome back. Glad to have you. And like I said, we meet normally on Wednesdays. I may not be around next Wednesday, but I'm basically around most Wednesdays. And the big thing too is, if you follow me on my Patreon page, I always post my like repost these market streams, and I post my blog content on here, patreon.com/stockdarts. So that's, you know, just follow me on Twitter or visit here, and that's where you find my stuff. Now, some of the stuff on there is subscription, but that's really for early access to have access to trades. If you just want to read my thoughts, they usually go free after a few days, when it's really not actionable to trade anymore, but it's still there for educational purposes. So that's where I'm, instead of going with the Stock Guy 22 site, I basically have just moved to this, to patreon.com stockdarts, and do my stuff on there. Okay? But good to see you here. Good for you to pass by. Ray, good to see you as well. Glad to see that you're trying to broaden your horizons and look at other stuff. We'll see. I think this is going to be a good year for cryptocurrencies. I think that we're probably due for a pullback soon, but I think that they are picking up steam and should be okay. I know. Yeah, Binance might be difficult. Yeah, we'll see, Ray. We'll have to figure out a solution for you. But hope you guys have a good rest of today. Thank you for interacting and for showing up. Those of you that were quiet but were watching, thanks for passing by. You can always ask me on Twitter, and I'm more than happy to answer your questions on there. Other than that, hope you guys have a good rest of this week. And like I said, I probably won't be around next Wednesday, but I will be the weekend after that. Okay?